Okay, thanks for joining me again today. I'm actually going to start with cable because I've been trading this quite a lot today and we've just broken higher. My charts are a bit delayed, so you can't see where we are at the moment. But we've just broken above. Where are we? Oh, here we go. Hourly chart's probably the easiest thing to look at for this. We've just smashed through 164.60. We're trading up to 164.80. So yeah, this is broken out now. I did think we were going to start to go lower. I did think this was a sort of head and shoulders pattern. Actually, I'll show you the 4-hour chart. I did think that this was a head and shoulders pattern. Well, it is a head and shoulders pattern, I think. But you can see that. But anyway, we've now broken high through 164.60. So this really does look quite positive, and looks like we're going to test 164.90, 165.00 today. We're not a million miles away from it now anyway, right? 25 pips away, but that looks like the next target for cable. I have to see what happens there. If we keep going, then I don't really see any reason why we won't test sort of 166.00, which is the previous high, which we've already been to in January. But we definitely do have a lot of resistance up there, which I can show you from the weekly chart. Let me see. Weekly chart, here we go. This is the trend line that I've been monitoring for quite a long time now. So this one goes back to 30th April, goes back to the end of April 2012, so quite an old one, nearly 2 years old. And you can see that we spiked through there several times, and now that we're failing to get through there. So I really didn't think that that's the end of the rally for cable. I think if we could, what's the high of this last week's candle was 165.08. So it does look like we're going to challenge that actually. If we get through 165.08, which is starting to look more likely, I've got to say, if we get through that anyway, if we get through the 165.00, 165.10 area, I think we'll probably have another go at the 166.00 area, but I do think that will probably hold. And I do think that is a really good selling opportunity because I just think that the cable is going to start running out of steam. I think we'll get a double top there. We have got some longer term Fibonacci resistance as well, but we've also got the we've got that around where we're hovering around the 164.5 area. But the other thing that I've noticed on the monthly chart is that we've got the 100-month moving average at 166.34. So I really think that sort of 166 area is going to be where we start to struggle in cable. Anyway, in the short term, at least we've broken higher, so we're probably going to push on today and see the 165.00 level. I'm misbuying on that break, but if we get back to 164, excuse me, sorry about that. If we get to 164, if we get back to 164.60, that's support today. So I'm guessing that will hold the downside now that we've broken above there. So just look for that 164.60, 165.00 range this afternoon. Then if we put you there, as I said, 166.00. That's just my immediate thoughts on cable because we've been quite active in it. I've got a live trading group and we've been quite active in cable today, which is all going quite well until we broke above 164.60. Can't hear me talking. Can anyone else hear me talking? Hello, any sound? No sound at all. Anyone? Okay, this isn't good. Okay. Sorry about that. Right, we do have sound. Okay, so that was cable. If you've got any questions on cable, just let me know. That's just my immediate thoughts. I mean, I'm not going to turn bullish on this unless we get through 166.00, and you can see overbought on the weekly chart as well, which is always reassuring if you think if you're looking to get short. Euro's the other one I've been tracking quite closely. Where are we? A weekly chart for the euro. Here we go. Okay, so this is quite interesting. If we go back to, I do like to go back quite a long way when possible. Back to 2011, obviously we had this big sell-off down to 2012, mid-2012. Then we had a nice little steady rally, fairly steady rally. And so we're testing the 61.8% Fibonacci resistance, which is a bit of a fave. 138.33 was that level when we first hit that back in October of last year. It held perfectly. We then dipped, and we've on this little uptrend line here, and then we retested it. But on that week, we managed to get as far as 138.92, so a good 60 pips higher, but that wasn't sustained, and the dip back told me that I thought that we were probably going lower. Now you can see that we've got this little trend line here that goes back to July of last year, when we broke below that last week, which does look quite negative. So we go to the daily chart. Now what we're doing now is I've just got the put a fib on from the last trough, which is around the 132.95 area. That was back in the beginning of November. We've had a good run up from there, all the way up to 138.92, as I say. But on that day we spiked higher and didn't close that far off the open. And since then we've headed lower. But it's getting quite interesting. So we've got this 6 month trend line going back to July 2013. You can see that held really, really well. Even in recent days, it held quite well. And then, boom, we broke lower. I think that was that Friday, wasn't it? We broke lower Friday, came right down immediately to the next fib support and trend line, 135.23. So the levels were working really, really well. Once we broke that trend line, we went straight down. And now we're holding this trend line, 135.20 area. Well, yes, we did get as far as 135.07. So we overran slightly, but on 10 to 15 pips is nothing really, is it? So what happens next? And it's quite tricky because I'm not 100% sure. But anyway, we're holding this support. We've held it 3 days in a row now. And we just got to watch it carefully. Yeah, I've been trying to figure this one out all day. I think we've just got to be very careful that we don't break lower. Let me just have a look at the hourly chart now, remind myself. Yeah. So my problem is that on the bounce, we didn't get to the 135.80, which was my target level to get short again. We didn't manage to make it. So I think this really is quite weak. The bounce has been very poor indeed. We haven't even managed fib target, hourly chart. And I really think the risk is now that we break lower. I initially thought I should be buying it around this trend line here, but I got rid of that idea when I started to see it looking quite weak. I think the risk is that we break down now below 135.00. So I'm flicking around my charts, just trying to remind myself of what's going on in this market. But be very careful and watch for that break below 135.00. I think we'll see 134.60 quite quickly, but we could get some real heavy selling pressure then, because the weekly chart doesn't look too good either. Let me just flick to the weekly chart. As I said, we spiked below there. We spiked up through there. We failed at the next trend line. Actually, up here at 139.26, we never quite made it. In terms of support, 134.96. So once we get through, 134.90. So once we break below there, I think it is going to add pressure, and I think we could start to tumble quite quickly. There isn't really much else to add on euro. I'm just looking at oil. I've got a position in oil, so I'm just going to show you what I'm thinking. Actually, March oil is where we're at the moment. So oil's now just breaking above 95.00. Hold on a second. Oil's just breaking through 95.00 actually. So yeah, this does look like it's going to push higher now. March crude I'm looking at. We're just getting through this 95.20 area now. Not quite sure what happened because we did just plunge a bit, but we've pushed higher. So it looks like we're on our way to 96.13 now. This is the next target. And from 96.15 up to 96.30, we're going to have a resistance there. But just thought I'd point that out because we are breaking higher now. On the back of that move. We'd only be in trouble again back below 95.00. We're trading around 95.25 at the moment, so that looks quite a good bet. It's just something that I'm looking at short term. Let's have a look at the hourly chart. Yeah, that's just showing that we've broken through there. We've got the 100-day moving average up at 96.06 as well. So that ties in quite nicely with our target, 96.13. That whole sort of low 96 area. It looks like we will go there now. If we get a dip back to 95.00, I'd imagine that's probably worth buying that. In fact, you can see that we had for the last 4 days highs up around 94.82, 94.78, and 95.07. So anywhere in that 95 sort of to 94.75 area looks like good support now for March crude. We should push higher. I was thinking that this was a bit of an inverse head and shoulders. This looked like the left shoulder, the head, which was almost a double bottom as well. The right shoulder, it's very uneven. Not that that particularly matters. I still can't decide whether that is an inverse head and shoulders or not. But I'm quite certain that does look like it's going to push higher now at least. In fact, I'm going to have to keep an eye on that because I would like to get long around 95.00 if we do get back down there. So let me know if you see March crude back down around 95.00. DAX, can we look at that? Yes, certainly. Okay, DAX futures. I'm sorry, my data is delayed. It doesn't update very well because I use my trading platform for live prices. But it looks like DAX is heading up towards the S&P's pushing up towards all-time highs as well as we speak. There's something funny going on at the moment. Markets have suddenly got quite volatile. Maybe it's because the States have opened after a day's holiday. So 98.00 is the all-time high for DAX futures. Looks like we're pushing there again. I mean, what can you say? The DAX just keeps going up. This is the weekly charts in front of me here. You scrunch it all the way up. Well, we all know that we've been in a massive bull market since 2009, and the most recent leg started in 2011, September 2011. Well, we've just rallied all the way up. Just don't get in the way of it. This is, something I've been preaching for quite a while. It all looks very positive, and just get ready to buy on a break above 98.00. Really, what can I say? We've got obvious support down at 93.86. That was today's low. No, yesterday's low. 93.86. Blimey. Okay, so we had quite a big move yesterday. No, sorry, that's last week, isn't it? 93.86, 97.99. Let's have a look at today's. I mean, the last 2 days you had a little dip, and it really doesn't take much, a couple of days off and the buyers are in again and off we go. So, we break above 98.00. We've got a little bit of trend line resistance up here around the 98.40 area. I imagine we're just going to keep, worst case scenario, we'll just keep trailing along under this trend line, and you wouldn't be surprised to see it break above here. There's just absolutely no point in betting on anything other than a rallying stock market at the moment. Stick with the trend. Doesn't matter how overboard it gets. It just keeps going up. And the dips just seem to get bought. Okay, gold. Yeah, gold's a good one. Okay, so gold caught me out a little bit. Weekly gold chart is here. So we've been in a really significant downtrend since October 2012. It slid quite a lot. We got down to 1180. We had a really good bounce, and then we've formed this downtrend line. So we're just really testing that trend line, and that comes in around the 1255 area. And I did think that was going to hold it. Well, it did last week, and then I was a little bit surprised by the break high this week, which was yesterday, I do believe. First thing in the morning, we managed to squeeze all the way up to 1262. However, that was really just testing that trend line that week. And we've rejected that, and now we've come lower again. We are still in a downtrend. That although we did break above 1255, we never managed to hold it. We're back below it. So really, there's nothing positive about gold at the moment. We're below that trend line. It does look like we're going to just test 1180 again, and really, I think we're probably going to break below it. You can't really fight this downtrend. That is a double bottom, but we're really not getting the reaction that you should get, I think, after such a potential reversal bullish pattern. And I just think that means we're going to fail. And, well, anyway, just watch the 1225 area, 1225, 1220 area. It looks like we're going to go there and then break below it. And I think we'll at least test that 1180 area in the very, very short term. We've broken below 12.43.42, which was a little bit of short-term fib and trendline support. We're now heading towards a 12.31 area. You can put these fibs on your own chart. These are just short-term fibs. That tells you we've got 12.31, 12.22, 12.12. On the daily chart, 12.24, there's a fib, and you can see there was some activity around the 12.20, 12.25, 12.20 area. So I really think that's our first major support. That ties in with one of the fib levels, isn't it? 12.22. There you go. That's that 50% area. Yeah. So yeah, at one stage I was getting quite bullish on gold. I really did think that double bottom rather was going to propel us higher, but it's simply not the case. And I've now given up on that idea, and I think we've just got to stay with the trend and look for gold to go lower, really. Okay. Any other requests? What have we done? DAX, we've done gold, we've done euro, we've done cable. Okay, I will have a quick look at the S&P while we're looking at some stock markets. Okay, so the same sort of picture, obviously. 2009 we bottomed out. We didn't have quite as big a drop in the middle of this rally as we did with the DAX, but we've pushed on. And the weekly chart, just all it's shown is 1, 2, 3, 4, 5. For about 4 weeks now, we've just gone sideways. We've just consolidated the rally, which allowed us to unwind what was an overbought situation on the daily chart. Now we're back up testing all-time highs. As I speak, we're trading around 1843, so we're just a couple of points below the all-time highs at 1846. And I mean, I don't think you'd want to bet too much money against us breaking higher, would you? Not with the way things are going. And we'll just be off to make new highs again before too long, I would imagine. There's not really much else you can say when you're in such a massive bull market. These bull markets will take a long time to turn if and when they do happen. I don't see them suddenly plunging 10%, in the matter of a couple of days. I might be wrong, but I think that whenever we do top out, it'll be quite a lengthy process that takes weeks, possibly even months, before we start seeing significant sell-off. So I think you get plenty of warning in these stock markets, and until then, just probably stick with the bull. Dollar CAD, let's have a look. Okay, dollar CAD. Weekly chart, let me just see. I've not looked at this for a long time. Obviously, we've been heading lower. Let's put some figures on, try and get an idea of what's going on. Okay, so you can see the first fib around that 94, 90 area worked fairly well. First time, second time, we had a good bounce off it, and then finally we broke lower. Now let's have a look. When did we break lower? Okay, November. And since then we've just drifted off. First week of January plunged. Okay, and we're just testing the 50% fib, and really that's not looking too good at all, is it? We're just sitting below that now. So in a bear trend continues, really. Can't see any reason to fight that according to this weekly chart. Not really, no. What's this low here? 91.04. Yeah, we're just breaking below there. No, really doesn't look good at all, does it? The daily chart, is that telling us anything? Well, daily chart's oversold, but hey, that doesn't mean anything, does it, when you're in such a steep bear trend? So certainly wouldn't be looking to pick any bottoms on the back of the fact that we're just getting a little bit oversold anyway. The MACD still looks very negative indeed. Very, very much shorter term. Our chart, not really saying much. Hourly chart's showing a little bit of a bounce, so if we do get a decent bounce, let's try and find somewhere, some sort of target. I'm just going to use fibs for that. There's no trend lines really that we can throw on this in such a steep move. Sorry, that's not right. The fibs are working quite well. Dollar CAD's an uptrend. Why have I got dollar CAD in a downtrend then? I think you've got it the other way around. Have you? You've got CAD versus the dollar. Okay, so you want me to look at it this way around, I'm guessing? I think that's the Canadian over the dollar. Okay. Same thing in reverse. There we go. Yep, looks positive. We're pushing higher. It's kind of odd. Why are the fibs not lining up? Anyway. So 109.80 is where we are, roughly speaking. As I say, this is probably a little bit delayed, but daily chart looks positive, overbought, no reason to sell it. The candles are all fairly positive. Just having a look at the weekly chart again. Yeah, we're above 108.70, which is positive. All the moving averages are positive. Short term, anything to say that we're going to see some profit taking? Not really. No. I mean, if we do see some profit taking, I can give you some support levels. I'm just using fibs as to say I don't really think there's anything trend line wise that's going to give us any major clues. Let's see, what does this do? Doesn't really work. Well, this trend line only goes back a few days, back to the 16th, so nothing significant, but you can see that we've got some support around 109.45 area maybe, and then we've got fib support down here at 109.15. So really only a break below this little point here at 109.00 would be a problem in the short term, but can't really see any reason. Dollar CAD has busted through the monthly time frame, fib 38 and 100. Yeah, has indeed. You're absolutely right. The month moving average, 100 month moving average, I've got it 106.13. I've used a simple. You use the exponential moving average, do you? Okay, well, fair enough. I don't know if there's a huge price difference between them, but yeah, it's busted up, so it does look positive. As I say, massive upside. Yeah, I mean, as I say, I can't really see any reason to sell it. It does look positive. Stick with a nice bull trend in this one. On the weekly chart, at least, you've got a little bit of activity up around the 111 area, 111.25. I mean, that would be an obvious longer term target if you're looking to for something along those lines. You've got some Fibonacci resistance at 112.35. But yeah, you're right. That break above the 100 month moving average really saw us propel higher this month. So January's looking very positive indeed for this, and I agree with you. I just don't see any reason to try and fight this one. Certainly wouldn't be looking to pick tops. And if you're already long, looks like one you want to hold on to, really. Can't disagree. Not really sure if I can say anything else on the matter. Got some targets there for you. Can I look back any further? Let's just see. No, look, we've got really ultra long-term Fibonacci's here going back to, what year is this? 2002. Okay, so I do like to go back a long way. 2002, I mean, so really this 107.40 area, I know that seems like a long time ago, but on a weekly chart, it's not that far away. So once we bust through there, that was enormous. And of course, we had that 106 area as the 100 month moving average. So yeah, we've pushed through there, and that's obviously set off a lot of buy orders, and we're just going to continue negative. Suggestive of an exhaustion extension? No, I really don't think so at all. I can't see any exhaustion move here. I can't see any reason. I mean, overbought, yes. So what? It's not relevant. I mean, very, very short term, a tiny double top here. Just don't, maybe we'll see a little bit of profit taking very, very short term this week, but I think you're talking about a longer term position, and I don't really see any reason to get out of that. No. I hope I'm right. But does look very positive indeed. You've got a little triangle here. What's this? Yeah, kind of a triangle. So that's a sort of consolidation pattern of this on the move. We consolidated for a few days, 6th and 15th, so we consolidated for about a week or so. We've broken higher. We've come back to test that trend line, so 109.75 area, then we should just push higher again. It's held. So no, I can't say anything about exhaustion. I think it all looks pretty positive, really. Excuse me. Aussie. Let's have a look at the Aussie. Okay, so this is actually charting quite well as well. Currencies are charting really well at the moment, actually. Everything else is a bit tricky, but so Aussie has been selling off since April 2013. We're up to whatever that's 10 months or something. I'm technical only. I don't look at anything else. I don't look at any fundamentals whatsoever. I do think their report's quite good actually, but I don't read it myself. No, I stick to purely technical stuff. So Aussie weekly chart was looking all right. A little bit of a double bottom, managed a bit of a rally, but this candle here absolutely killed it. That is last week's candle, and we broke below the previous lows where there was a hint of a double bottom around the 89. Where are we now? What's that about? Around the 8900 area anyway. No, 8848 we got to, and then we got to 8821. So anyway, below 88, so we had a hint of a double bottom. And being so oversold, I was thinking maybe we just rally from there, but it wasn't to be. On the daily chart, you can see we just managed a very small recovery. Anyway, we've now broken lower. Just doesn't look good, does it? I think we've got to stick with the trend here as well. So these currencies are in really good trends. Short term, we managed a good bounce, fib bounce to 88.30. We had some of our guys in the trading group got a short around there today, which was quite nice. We've sold off, and really, it looks like we're going to be seeing 87.55 new lower. We've got a little bit of fib support around the 87.11 area. Below that, we've got 85.5. What can you say? Stick with the trend. I'll say it over and over again, but we all know that it works. And wait for some signal of a bottom, but I can't see anything along those lines at the moment. Nowhere near it, really. So I think it's safe to say we just stick with that trend. I'm going quite fast today. Sorry if I'm going a little bit too fast. Just see what I can pack in. Trigger for entry, trade entry. You just assume price will bounce at key technical level, or do you enter? Oh no. I don't just look for one thing. I look for all kinds of different things. For a start, I look across 4 or 5 different time periods. So I'm looking at different trends and moving averages and fib lines and patterns and candle formations and stochastics, MACD. I don't use anything particularly clever. I just use the basics. As I say, trend lines, fibs, stochastics, MACD, moving averages, pattern formation, candle formation. But I try and put it all together across 4 or 5 different time periods, and that's really just a case of putting the jigsaw together, looking at what the different time periods say about the market and trying to match it all up. And if you get lots of different support areas across different time frames as markets get oversold, then you're kind of figuring, well, that's probably a good enough reason for it to see a good bounce. We're in an uptrend, something like that. That's really all it is. It's nothing clever. It's just a case of putting it all together and trying to figure out the most likely scenario. As I say to everyone, I don't have a crystal ball, but I do try to just figure out what the most likely scenario will be and where the lowest risk entry points are. I think that's really all you can do. Am I allowed to advise on brokers? I've got no massive opinion on brokers. I think pro spreads are very good, and I can introduce you to them. But other than that, not really. But if you want to email me, I can talk to you about that, probably outside of the webinar. Japanese yen. Yes, I'm looking at Japanese yen. Okay, so this is quite interesting, the yen. You probably remember from last time, nothing's changed an awful lot since then. But We have had a huge rally up, and I do like to go back a long way. As I said, back to 2002, you'll see that we had a really big sell-off all the way through. We've been in a downtrend all the way through to 2012. So we had a 10-year bear market in dollar yen. So really, when you see that, you look at the last 2 years and we've seen a good rally. Well, yes, we've had a really good rally and a really sharp rally, but on the grand scale of things, that's still just a bounce in the bear market, in a 10-year bear market. So we've managed a really good run all the way up to the 61.8% fib, well, the 50% and 61.8 longer term fibs, which both come in around the 105.5 area. Well, guess what? That's exactly where we've halted so far on this rally. We've got to 105.44. And we started to sell off a little bit. You wouldn't expect it to collapse straight off the resistance. So we had a little dip down to the first fib support. First fib support was 102.70. We got to 102.85, pretty close. Managed to bounce, and I just think we're now going to have to retest that level. We've had a good run up. There's a little trend line here around the 103, 90, 85 area, and I think we're just going to have to retest 105.40, 105.44. It just I don't know why. I just think that's going to happen. I can't really give you any good reasons. But I think there's a strong chance of that. I do think, though, that we are topping out mid-fall again, and I think longer term we are going to start to see that sell-off this year. Just like I think we could see the euro sell-off, and I think we could see cable sell-off. We'll have to see. Oz, New Zealand dollar, yep. Oh, sorry, I should actually just finish off with the dollar again. So we really need to push above 104.75. That's just because it's today's high. We've got a little bit of fib action around there as well. So if we can push through there, I think last week's high was 104.92. So that's the obvious target. If we get through there, we've got this big trend line at 105.25. So anywhere from 105.25 up to 105.45 is going to be a struggle, I think. And that's why we're probably looking for this market to top out and start to head lower. But yeah, as I say, wouldn't be surprised to see a retest of that, and that would be a more significant negative signal if we retest that and then come down, and maybe a double top at strong resistance. That's the kind of thing you're looking for as a sell signal, really. New Zealand dollar. Okay, there you go. Weekly chart. Let's have a look. That's not really going anywhere, is it? That's pretty much going nowhere. The 100-week moving average is working quite well in recent months. Let me see. This one goes back to November. So yeah, November we managed to hold on to that. Well, you can't really say anything about the market. It's just going sideways, can you? So let's have a look at the daily chart. See if that's giving us any sort of short-term trend at least. Not really. We haven't really gone anywhere since autumn last year. Down a bit, up a bit. What can you make of that? You've also got the 100-day moving average, so that's been holding quite nicely in general. We had a little blip through it at the end of November, but since then it held quite nicely, and we've rallied off that, which isn't a million miles off the that's the 200-day moving average. Beg your pardon, pink one. And the 100-month moving average is the blue one, 81.51. So they're roughly around the same area, and that's worked really well. I guess that just doesn't look anything. You can't make something out of nothing, and that really is nothing. I'll throw some trend lines on. What we'll really do is give us some support and resistance areas. There's a bit of a channel if you want to look at something that's a bit more short term. I guess you could say that we're just developing some sort of uptrend channel here. Kind of clutching at straws, really, trying to make something out of nothing. I mean, it's just really isn't saying anything to me. It's a case of trade the range. This is the 4-hour chart, trying to make something of it in the short term. Well, there you go. there's nothing there. There's no pattern, you know. I just wouldn't know what to do with that, to be honest with you. If you put a gun to my head and said, what do I do with it? I really wouldn't have the faintest idea. No. Let's keep trying. Let me try. Me either. Well, you can see some levels that are kind of working there. These fib levels are quite kind of working. You've got 82.35, 83.10, 83.57, which 83.55, sort of 50.55 area, which ties in quite nicely with that resistance. Look at oil back around 95. That would be worth trying to buy some there. In fact, I'm just going to do that. Let's have a quick look at oil. See if I can refresh it. Please refresh. No, no good. Okay. Well, anyway, oil spiked as high as. Let's have a look. 95.50. So we managed to get halfway to our target, and now we've pulled back again. Sorry, I haven't got updated prices on this. Bit silly, but I just use my trading platform for live prices. And then we pull back to the 95.00 area. So I'm guessing we're going to just propel higher again off there. Also watch cable because that 164.60 area is going to be support, but we haven't managed to retrace back to there yet. I'm probably going to do something along those lines with a 30 tick stop on that oil. Probably looks like it's worthwhile. I mean, short term it looks quite positive, in fact. If only I could update my system. But overall, in the hourly chart, I don't think that really matters. We spiked through that trend line. Where's that trend line? 95.09. Yeah, so again, that sort of coincides with the support area that I'm looking at. Let me see. How do I try and refresh this stupid thing? Okay. Oops. Didn't mean to do that. Where are we? Here we go. It's at 94.509. Yep, thanks for that. Okay. Just about to buy it and I've missed it, but I'll try and get some again. Has that updated it? 95.20, no. Hasn't. Anyway, you can see that trend line that comes in around 95.10 area, and then you've got these previous highs at 94.94, so that whole sort of 95.00 area is looking alright. And if we get back down there, I think it's probably worth a little purchase. Maybe with a stop just below 94.70. That's got to be worth it for the afternoon, I think. Just missed the last 10 tick moves. I'm going to have to hold off now. That's what happens when you try and do a webinar and trade at the same time. Right. What have we done? New Zealand dollar we've done. Canadian we've done. Aussie we've done. Gold. What's gold doing? Hovering still. See if I can update that cable chart. All these things. There you go. No. Okay. E-signal is quite good. As you know, I've been using that ridiculous Thomson Reuters system icon, which was rubbish. I've gone back to e-signal now. Found temporary support there, yeah. Oh, look, rallied off, missed it by 10 pips. How annoying is that? I wish you can stick an order in, because I'll probably miss it again. 95.05. Sorry about this. But if I don't do that now, I'll probably miss the trade. Cool, thanks. I'm also trying to sell some gold if it gets back up to that 12.40 3 area, because I think that bounce would be enough to get short, but I'm knowing my luck, it won't get there. So those are three things that I'm looking at today. Oh yes, I was talking about that live trading group that I do. We've got 45 people in there at the moment. I don't normally talk about my services on this webinar, but it's going really well. We've got 45 people in there. I basically do this all day long, break down charts, look for trading opportunities. We try and nick sort of 30 pips, maybe 40 pips on a trade. At the moment, that's all that there is in the market. So we're just looking to take what the market gives us. And I think it works quite well. I think most people are very happy with it. We seem to walk away with a little bit of profit every day. I'm not advertising it anymore because we've got so many people in it. But I've got quite a few people that follow me on this webinar regularly, so I just wanted to mention it to you. And if you're interested, I don't know if you already subscribe to my reports, but if you wanted to give the live trading group a go, you'd be very welcome. As I say, I'm not advertising it to anyone any further because I'm not really looking for any more members, but I do give 100% money back guarantee if you're not happy after a week or two, because I don't want to upset anyone. And I know there's plenty of people out there ripping and all this rubbish, and it really does annoy me. So anyway, the offer's there if anyone's interested. What else? Done dollar yen, done Aussie, Swiss franc, probably worth a look. If it updates, here we go. Okay, so we've been heading lower in Swiss franc quite a while now, well over 6 months. You can see this level. Actually, I'll put it on the daily chart because that's going to show it more clearly, because really the only interesting bit is the last 6 months where we've started coming lower. Before then, we weren't doing a whole huge amount, but we're just pushing up above fib levels here at 90.80 this week, last week. So it's looking a bit more positive, actually, especially after that negative candle here. You see the way we spiked higher at that fib resistance and then closed low. You'd have thought that was a sell signal, but the next week we just rocketed higher. So this is actually looking quite positive all of a sudden. And it's all also backed up by the MACD and the slow stochastics there. Okay, so shorter term on the daily chart, we are now approaching the next resistance, but we've broken above 100-day moving average, which again is quite a positive. It does look quite good, this Swiss franc. We're in this little uptrend here, this up channel wedge thing, whatever you want to call it. So we've got to get through 91.65 now. If we can get through there, I think we'll push on to the 200-day moving average at 92.30. So there is a bit of hope there, but we definitely are going to struggle around the 91.65 area. So just watch that as the next resistance already. We've backed away from there. I think at 91.56, we've got to be careful with that one. Short term, guessing we're looking a bit over what we are. Hang on a second. Yeah, okay, so if we were to drift low, we've got pretty good support around the 90.70 area. But I don't think that would be, what is that time in the daily levels? 90.70. Yeah, okay, so that's also 100-day moving average. So we've got a bit of trend line support and 100-day moving average at 90.70. So if we do happen to come lower, and we've also got that weekly fib at 90.77. So yeah, that does look like good support if we do see a bit of profit taking. Just watch that 90.75, 90.70 area. That's probably good support. It may well bounce off there. If it doesn't, then that's going to look a bit more negative. 1 hour chart is looking a little bit negative, actually, so we could see a bit of profit taking, in fact. But longer term, that's not looking too bad, as long as we have still got one eye on cable, because that is coming back down again. I'm just going to put an order in that, actually, and see if I can do anything with it. Okay. We've done stock markets, we've done oil, we've done gold, we've done most of the currencies. Just going to have a look at Brent crude, actually, because this was actually looking even more positive than WTI. Where are we? Okay, so this is rocketed higher as well. 4 hour chart showing a bit of No, actually, no, sorry. I need to just look at the March contract only. Hang on. There we go. This, I said about the 9X WTI crude, how that looked like there was a bit of a head and shoulders, but I really couldn't make my mind up. Well, this Brent crude does look much more like, it's just the March contract only, not the continuation chart, but this really does look like more of an inverse head and shoulders. You can see that quite deep left shoulder, the head quite small, the right shoulder all quite symmetrical. Anyway, the break above 106.90 was the confirmation, and look at how it's just rocketed straight to the next target, 107.90, hit there. So really this does look pretty good actually. It's all technically working quite well, but I wouldn't be surprised to see it continue higher. Today, I don't know, but it does look quite positive. 108.70 wouldn't be a huge surprise. Can't believe I missed buying that WTI just then. It's now 20 pips higher. That is really annoying. So yeah, that did work quite well, and I do like these inverse head and shoulders when they form. A relatively low risk. It's probably, I always try to preempt it and get into early, and then half the time it doesn't work. But if you do actually wait for the confirmation and the break through the neckline, these things do work really quite nicely. I tend to find, and so do normal head and shoulders. It's a pattern that does tend to work. Crude now trading 95.30. That's very annoying indeed. So watch Brent crude if it gets through 107.90. I think we'll have a pretty quick move to then 108.77. I would imagine. Okay, I don't know if there's anything else worth looking at. If there is any requests, or what do you think we've done today? We've covered quite a lot of ground. I've been going quite quickly, but I think we've covered all the things we normally cover. I'll just show you pound versus the euro. We're breaking above here as well. Look, we've got this chart goes back to 2012, July 2012, and we've broken through the 100-day moving average. We're now above the 50% fib at 21.17. We struggled there the last couple of weeks, but we're just pushing on, and that looks quite good now. Cable probably going to outpace the euro again as we push higher. Nat gas, yeah, sure. Okay, nat gas, we've got a bit of a double top thing going on here, kind of. It's a bit tricky to read, but anyway, you can see that we struggled at this trend line when we went for it second week of Jan. It's a kind of a double top. I'd like to see it a bit firmer, but anyway, it hasn't. It's not the case. We did fail at 95.13. We've dumped straight to the first fib support at 4,200. That worked so many times that 1, 2, 3, 4, 5, 6 days, not 6 days in a row, but on 6 occasions that 4,200 levels really, really worked. So that's the one to watch. We start to break below there, then maybe it's really volatile in that gas at the moment, more so than usual. Don't know what's going on in it. I don't follow the fundamentals, but you can see the next big support is down here around the 40 area, 40-45 area. 44, yeah, 44, 47. Okay, so yeah, I've got it 44.21. I'm a few minutes late on that one. There we go. Cable might be just giving us a buying opportunity here at 164.65. I would hope. I'm going to buy a little bit there and see if I can get something going on that one. I'd love to see oil back where I just missed it by a few pips. Okay, so if we do break that 4,200 area, we're probably going to see it around 40. I mean, it's so volatile that who knows? You could easily do that, whatever that is. It's like 200 or 150 pips in a day. I mean, it's quite possible the way nat gas moving around. I don't know why it's been so volatile this last couple of months, but you can see what's going on. It's really, really picking up. So something's happening, and I'm not trading it because that's way too volatile for me. But the big levels to watch are 4,200, 40.50 to 40.40 area, and then really, I mean, you've got some resistance up here around the 44.30 area, 44.35. Today's high is 44.26. So, that sort of area. Okay, we've got to wrap it up. Fair enough. Yeah, it's 10-2. I hope I covered lots of pairs there. Difficult at the moment. There's nothing that's really screaming at me to do. So, it's tricky. I'm finding it quite tricky to find really good trading opportunities. Hopefully by next time we will. That is my email address. and you can get my website from there. If you're interested in the live trading group, you want to give it a go for a couple of days, just let me know. And you're very welcome. Thanks very much indeed. Until next time.